In today's Forex midweek analysis, I'm sharing how I'm trading the DXY, the Euro, the Pound, and also gold. And I'm excited about this video because we're finally starting to see the Forex market move in a way that could produce some really nice opportunities over the coming days. So this is a must-watch video. And as I always say to you guys, this takes hours to make and a few seconds to like it and show some love. So be sure to do that right now. And also subscribe to the channel because I have videos coming out like this all throughout the week. So looking at the DXY, we did see the market break below 100.2 last week. So what we talked about in the weekly forecast was the fact that the market had broken below here. And in fact, last week we were talking about some potential US dollar weakness too, following this breakdown. And what I mentioned in the forecast though, is that you had to be careful getting bearish on the US dollar early this week because we did have this area around 99. And you can see where the market has bounced right from that level so far this week. Now, what's interesting about yesterday's candle on Tuesday was the fact that the market closed near session highs. Not only that, but if you look at these lows from back here, specifically these, okay, so over here from this low, if you draw a level across here, you can see where we have several lows in this area, okay? So we have these lows over here in closing prices. We also have these lows. And notice what is serving as support so far today. So we did see Tuesday's candle not only bounce from 99, but also take out a minor level through here that the market is finding support at so far today. Now, the key for the DXY, and we talked about this a lot last week, but the key for the DXY is that, yes, we are seeing a bounce so far this week, and it could be, okay, it could be a potential higher low. However, the key for the DXY, in order for this to stay constructive and to get a bounce or a bottom here from the US dollar, is going to be areas like 100.2 up toward 100.4. The reason this is significant is you can see here that we have this trend line off of the high from back here. Okay, so this high up here, we've got this high, and also this one, and also the fact that 100.2 is a key horizontal level that we've talked about in the past. So as of right now, guys, even though we have the market looking a little more constructive to start this week, okay, the fact is the market is still below resistance and the market is also still within a downtrend. So this so far is not enough to reverse the downtrend that we've seen here ever since the start of 2025. This has been a very established downtrend. It's going to take a lot, guys, to reverse this trend. So we could see the DXY go sideways here a little bit. Like I've said in past videos, my ideal scenario for the US dollar would be to see a reclaim up here. And the reason for that is not because it's likely right now, but because I know that a reclaim up here on the high time frames, if we got something above 100.2 to 100.4, up here in this area, this would confirm this down here as a failed breakdown, okay? Because we had this channel right here, or, you know, what could be a bear flag. And if the DXY can reclaim this area, then this becomes a failed breakdown. And typically when you get that, you do get an extended move in the opposite direction. So from a high probability standpoint, okay, this area up here, a reclaim of this would introduce a high probability US dollar long, at least for me, up here toward some of these key levels. Another reason that I would love to see this, guys, and again, it doesn't mean that it's likely, but another reason I would love to see the DXY reclaim this area and actually turn higher, carving out a bottom down here, is because of this move back here, this aggressive sell-off that we saw in a very shallow retrace. So we talk about this a lot, but look at these three candles back here and notice how we got a very shallow retrace. All of this up here is considered an imbalance or an FVG. And the reason that's important is because it signals open liquidity in the market. Okay, so there were a lot of orders back here that did not get filled because of how aggressive this was. And one of, Mr. Market's main responsibilities, we'll call it, right, is that a market wants as much liquidity in play as possible. Okay, and we're talking about market makers, but they want that liquidity in play. And there's open liquidity back here, which is why you tend to see FVGs like that serve as magnets, for a market. However, you need a trigger for that to become a target. Okay, so this is a potential magnet or target. It is not a likely target right now because, again, the market is below this area. Okay, so this right here would be the trigger, the technical trigger above here, and magnets such as this up here could become really interesting if we do get that move. Now, alternatively, okay, if the DXY doesn't do that, because right now we don't have confirmation of that, if the DXY just continues lower, then this area up here is your resistance, support down here, and support down here around 97.7, okay? So that's kind of the scenario that we're in right now. We're in a range-bound market right now for the DXY until proven otherwise. So again, we have to treat this as an indecisive market. Either we get the reclaim up here in that rally that we talked about, or we get the sustained break below 98.9 for a move down there toward 97.7, okay? So let's move on here and take a look at the EURUSD. And again, guys, if you are enjoying this content, be sure to subscribe to the channel and don't forget to hit that like button. It really helps out these videos because it does take a ton of time to make them. So looking at the EURUSD, we are seeing the market hold above the key support that we talked about last week. Okay, so we had a very aggressive rally back here. We had the market move into this consolidation, also a potential bull flag that we talked about last week. And you can see where we did get a Friday breakout. Now, this is where I want to start talking about, the potential for Friday breakouts to fail, because they are more prone to failure than other breakouts, and that's because of lower volume. And that was especially true last Friday because that was the Friday before a US holiday, which was Monday. So we will see what happens here, okay? But like I've said for, a few videos now, my ideal scenario would be for this up here to become a failed breakout, get the break back below 112.75 to set up those lower targets. And just like the DXY, okay, the inverse of the DXY, essentially, we do have an imbalance back here for the euro. Okay, so what you'll notice back here is that we had the euro going sideways. Okay, we then had the breakout. This breakout here was very aggressive. We saw a very shallow retrace into it before the market took off again. But all this down here, guys, is an imbalance. There is open liquidity down here in this area. And again, markets want as much liquidity in play as possible. So knowing that this down here is open for business, okay, that could become a potential target for the euro. But with that said, okay, the last thing you want to do is go short support, because look at this on the 4 hour, okay? Notice what's being held as new support. Okay, so back here, you can see no 4 hour close above. The market broke out here on Friday, and so far, this is key support. However, at the same time, okay, I'm not convinced that this area is going to hold. And part of that is because of those imbalances that we talked about. A lot of times, guys, those act as magnets for a market. And I do think that we have the potential, okay, for the euro to be drawn to that area down here, okay? So we'll see what happens. Bottom line, guys, this has to fail, okay? This has to fail right here. We have to see a high time frame close below this to confirm this as a failed bullish breakout and expose those lower levels, including 112, 110.60, potentially areas like 109.30, okay? So that's what I'm looking at right now, guys. Still very indecisive. We don't know if this is going to hold up or not. And again, I want to be very clear here, guys. Just because I'm talking about the potential for this to be a failed breakout does not mean it is the likely scenario. It just means that if this does fail, okay, that Friday breakout, again, that are prone to failure, if it does fail and we see the market close below here, okay, that this is a high probability move down here towards some of these key levels, okay? So right now, indecisive. The market is just, very sideways here within this congestion. But I would love to see that here because, again, I know that that's a high probability play if we do get that failed breakout. All right, so let's move on to the pound, which is becoming equally interesting here. And the reason for that is because we have this area back here at 134.30/40, okay? So these highs going all the way back to September of last year. The reason this is interesting is because, once again, we had a late week breakout, okay? And again, before a US holiday. So a lot of times those breakouts do fail, but so far, as long as the market is above this area back here, 134.30 to 134.40 or so, this is going to be key support for the pound. So there is no confirmed, buy side fake out here. If the market gets below this and starts closing back below here on the daily time frame, okay, so moving back below this level here on the daily, closing down here in this area, this becomes your failed breakout, and this becomes resistance, and then you get that push down here toward some of these key levels, okay? Now, just like some of the other markets that we talk about, the pound does have an imbalance back here, because even though we saw 132 tested, right, look at this rally back here. Look how aggressive this was, and look how shallow this pullback was, okay? So there are imbalances back here for the pound, a lot of them down here just below 130. So this could serve as a magnet if we do get that trigger. Again, guys, this is going to be your potential magnet down here, okay, down here in this area off of these candles. And the technical trigger is up here at 134.30/40, okay? So get below this. I think that opens up some downside targets. But until that time, guys, this is going to be key support. So do not make the mistake of trying to short the pound into this critical support area, because it is going to be a big level. It is a big level going back to September of last year. And the fact is that last week closed above it. Okay, so you have to go with what's on the chart. You have to respect the chart. Don't just trade what you think will happen or what you want to happen. Now, one reason this could fail, though, is because so far, I talk about this in other videos, but notice how we had the breakout back here. And so far, if we get the retest today or tomorrow, there's really not a lot of, what I call white space between the breakout and the retest. And what I mean by that, and what that indicates, is the aggressiveness of the pullback. Okay, so a lot of times when you get a market that breaks out above a key level and does this, okay, nice gradual pullback, the market will continue higher. However, if you get a key level where the market does this, okay, and moves right back to the level without that gradual pullback, similar to what we're seeing here so far this week, this right here typically ends up being a failed breakout. And it's all because of the velocity of the move, right? If you have buyers defending this, big buyers defending this every step of the way, then you're going to get that nice gradual pullback. However, if you have big sellers in here, right, and not a lot of buying pressure, then you're going to get a much more, aggressive pullback into that key level. So it's all about who's pushing the market around. And if you see an aggressive pullback like this, again, a lot of times, guys, this does end up being a failed breakout, but we'll see what happens. I mean, the chart is going to, at the end of the day, always has the final say in where we go here. And 134.30/40 is going to be that level to watch. So let's wrap up here with gold. And by the way, guys, too, I did just partner with XM Group, where you can trade all these markets on their platform. They've been around for 15 years and they've got a great reputation. So I did just partner up with them, where if you sign up with them this week and deposit $1,000 or more, I will grant you lifetime access to the VIP group that includes the community and the course that I just launched. So check out the link in the description of this video and sign up with XM, deposit $1,000 or more, and I will give you lifetime access to VIP. So looking at gold, guys, we have a very interesting setup that is actually occurring today. And full disclosure, before I forget, I did enter short here today that I also announced in the community, because I do announce all of my trades in real time in the community, in that VIP group. So I am short here from this retest so far today. And it may seem crazy to be short gold, right? Why would you short gold within this uptrend? And the reason for that comes down to, once again, we saw a failed breakout. Okay, so late last week, we did get a breakout here from gold. Again, going into a US holiday, prone to failure. You can see that we did get the close back below on Tuesday, retest as new resistance so far today. So this right here represents a failed breakout on the high time frames. So although there are no guarantees, okay, typically when you see this, you do get a market moving in the opposite direction, an extended move in the opposite direction. So looking at gold, right, we have the aggressive rally up, we have the pullback into support. Okay, so everything checks out there. However, now we have this failed breakout. So this opens up levels like 32.38. We've got this area around 31.30. And then we also have an imbalance down here in this region for gold. Okay, so this very aggressive move up, even though we did see the market come back here and test support, there is still technically an imbalance back here in this region. Okay, so that right there could come into play down there around 3,100, maybe just below, sometime in June, if we see this hold up, if we see gold stay below this. Now, if gold were to close back above 33.20 or so, okay, so if we were to see a daily close back above this area here sometime, this week, then that would keep the rally intact and this would not be a failed breakout. Okay, so there are no guarantees, but so far it is looking relatively weak with gold closing back below that key level that we talked about last week. Okay, so I am short here, looking for some of these, lower levels here, 32.30/40 and 31.30 as well. And then of course, we've also got that imbalance back here, that pocket just below 3,100. So as a side note too, guys, this right here, okay, the fact that gold has actually failed to hold this breakout could be indicative to the US dollar potentially finding a bottom here, because a lot of times gold will move inversely to the US dollar. It's not always the case, but you do get a lot of inverse correlation there. So the US dollar, looking at the DXY, which is actually perked up a little bit here during this video, this right here, okay, that higher low, that potential higher low, and the potential for that move back there toward that imbalance, the fact that gold failed to hold this breakout from last week could be indicative of what's to come for the US dollar. Okay, just a little bit speculative there. But again, there is a lot of inverse correlation that occurs between gold and the US dollar. All right, so keep an eye on all of this week, guys, because we do have some potential setups coming up from the euro and the pound, and gold failing to hold that breakout from last week could produce an extended correction. As always, never financial advice, and keep it locked in here. Like the video, subscribe to the channel for more videos just like this one.